So the third and final trading strategy I want to talk about from an intraday perspective is how you can utilize Ichimoku Clouds to identify short-term trends. Now, if you want to put an Ichimoku Cloud on the chart, I'll just erase it and show you. Use f of x here, type in Ichimoku, begin to type in Ichimoku, and you can see we have the cloud come on. Now, how you look to use this indicator is you look to follow the trend mainly with it. So what you look for is a break below the Ichimoku cloud, as we had here, would be a potential short signal. Now, you could place a stop loss either above the cloud itself or above a previous swing high, and you can see the market fell down lower for quite some time. You can also use it as potential resistance or support. So if we're coming into the cloud here, when we have this rejection, this negative price action in the cloud, that can be seen as possible sell signal, and once more we fell down lower. After we made the low here, the price came in, the top of the cloud acted as resistance, fell back down, found support on the bottom of the cloud, then we break back above the cloud. Now this is indicative of a short-term trend change. You can see now the market is above the clouds, you can be looking for long positions, and the market continued higher for just over a week, up to about 10 days before we made the highs here. Once more we fell back down below the cloud. You could enter short positions once you're below the cloud, looking for moves lower, all the way down to these lows again, and then we saw resistance in the cloud before the market broke above here and once more made a push to the upside. These Ichimoku clouds always work best on trending markets, so I find commodities, oil particular, can work quite well on this on an hourly time frame, and also yen crosses. You can use shorter time frames, but I find anything shorter than an hour, you do get more false signals and it's not quite so clear. As you can see here, we had the break to the upside again, price moves strongly higher, so all the way up here, you're above the cloud, you're looking for long positions. Once we drop down below the cloud here, this could be seen as a possible short signal. Now you can also use the three lines that are accompanying the clouds. We have a leading signal and a lagging line. The lagging line is simply the current price projected 26 periods behind where it is at present. You can see the lagging line here now. After we break down below the cloud, fell down lower. Once break above the cloud, look for long positions. Below the cloud, short positions. Now obviously this isn't a foolproof method. It's not going to be right all the time, and that's why it's also important to utilise risk management and keep stop losses in place. But it can be quite a short and neat way to try and easily identify the trend. The US 100. You can see here we were in the cloud for quite some time. That represents indecision normally. At the top of the cloud here, we ran into possible resistance. We got some selling, possible sell setup. You can see we dropped down below. We had these lines out. The lagging line would have still been in the cloud. It wasn't until here we got further confirmation, the lagging line dropping below the cloud as well. And we had a large move to the downside of almost 300 points. Once more, we came back in here. We were hovering around the cloud. Here's a little bit of indecision, but note that the signal and the leading lines don't actually drop below the cloud, so that's not really a full sell signal, and the lagging line is also in the cloud. Once we've moved back above here, you can see the market pushed to the upside and made a strong push higher of around 200 points. Obviously this works far better in trending markets, so be wary of range bound markets where you will get more false signals.